Welcome back to Editors Roundtable. Well, the RBI has cracked the whip on many financial institutions in the recent past due to non-compliance. After Paytm Payments Bank, the Reserve Bank came down hard on Kotak Mahindra Bank this week. Nimesh has more on that. Nimesh, you've decoded the RBI's action against financial institutions in the past 2 years. Take us through that.
Well, Sina, normally we've seen that whenever there is a regulatory action on a particular company or a particular institution, the stocks tend to underperform. But, first the case is Kotak Mahindra Bank. We saw a big setback for Kotak Mahindra Bank this week when RBI has cracked the whip on the bank. They've said they're going to bar the company from onboarding any new clients digitally as well as issuing fresh credit cards. So that's been the clampdown on Kotak Mahindra Bank, and that's the reason why it was the biggest 12% down in 2 days itself. Yesterday the stock was down 10%, and today it was down 2%. So it's just a beginning, but the stock was already down 12%. But if you just look at the past history of all the other financial institutions where there's been an RBI crack, RBI whip, look at HDFC Bank in December 2020. RBI had asked to hold all the launches of new digital businesses and also sourcing of new credit card for HDFC Bank. And what has the stock done since then? Since the RBI whip, the stock is marginally up, just 5%, but largely it's been pretty much flat to negative. The last 1 year, the stock is down 10%. Same is the case with the other institutions as well. Look at Paytm. Twice there has been a clampdown from RBI. In March 2022, they were barred from onboarding new customers, and in Jan 2024, there was a termination of nodal account for and payments bank services as well. What has the stock down? It's been a massive underperformer since that thing. 53% down since the whip from RBI. In fact, in the last 1 year itself, the stock is on 42%. Same is the case with others as well. Look at the next example. M&M Financial Services. Even they, in September 2022, they were barred from carrying out recovery and repossession processes. Even this stock has relatively underperformed. Well, the stock is up, has recovered 25%, but if you look at a longer period, in the last 1 year, it's been pretty much flat in terms of returns for M&M Financial as well. The next stock on the list is IIFL Finance. That's a recent instance. In March 2024, there was a clampdown on IIFL Finance as well. They were stopped from sanctioning gold loans. What has the stock done? The stock is down to 32% ever since that RBI clampdown came. And in fact, in the last 1 year, it's been up 1%. But again, it's a recent instance. So the stock has actually underperformed, which is IIFL Finance as well. The next is JM Financial. Even for JM Financial, there was a recent RBI action. Even they were barred from financing against shares and debentures, and even that JM Financial, since the RBI announcement, has actually underperformed. Even that stock is down 35%, 17% since the announcement came. In fact, we have a very small history for that, but again, it tends to underperform. However, there has been one outlier as well, and that is Bank of Baroda. Well, there has been a big move in the PSU banks, but even Bank of Baroda, there was a RBI action. They were barred from onboarding customers for the digital, which is Bob World. But that stock has relatively outperformed. Since that RBI announcement, the stock is up 21%, but in the last 1 year, the stock is up 42%. In generally, we've seen that whenever there is a RBI action on financial institutions, the stock tend to underperform. And again, that's the whole point, right? That should one buy the falling knife? Maybe the history suggests the answer is no. Krishnan, you've been holding into all the financials. What's your take?
So in some sense, this is reminiscent of, say, the US FDA crackdown in pharma,
exactly.
Wherein, there are these idiosyncratic moves that keep happening every now and then for various.
But in the US FDA, at least, investors know that there's going to be an action, right? Here, though, it's all of a sudden, IIFL, after the announcement, was half. In 2 days, Kotak Bank is down 12%.
So it does increase the risk premium for the sector as a whole, right? But I think one has to see the context of where we are coming in from. See, I think some time back when I was on CNBC, we had said that, banking sector profits as a percentage of GDP were at a 25-year high at 1% of GDP, right? So therefore, the regulator is using the strength of the overall banking system, which can actually afford to take slightly longer or slightly more bolder investments into technology, into compliance, so that they can see a longer runway of growth into the future. So while, yes, there is a temporary setback, but I think banks as a whole will come back even stronger with all of these checks and balances. So I think it's more a question of timing, and possibly the series of interventions that have come through, but that's the way it is.
Okay, all right. So we've spoken a lot of sectors and stocks, but one factor that the markets are looking forward to is elections. And Prashant's going to address something interesting.
You know, people have been complaining all across. It's a quiet election. You know, people have been. So we spoke to two journalists in the morning. They were saying that we will travel to Karnataka, this state, that state, और कहीं पे कोई शोर नहीं है. It doesn't seem like an election. So political pundits and even some in the markets, financial markets, who take cues from elections and political events like the general elections are talking about how this is a quiet election. So far, of course, at least. How the voter turnout this time around as compared to 2019 is on the lower side, lower than expected. Why does it matter? So let's just quickly look straight into some of the data points. The total seats, of course, are 543, right? Seats that went to poll in the first phase, and we only have full data for the first phase. For these 102 seats, the average turnout was 67%. For these 102 seats back in 2019 general elections, the number was 71%. So there's been a drop, which we've seen, of about 4% or so. Voter turnout is lower in the Hindi heartland states. And the question which many are asking is, because the BJP is so strong and dominant in the Hindi heartland states, does this put the party at a bit of a disadvantage vis-a-vis other parties? What happened in 2019? I think let's just rewind the clock back. BJP won 40 seats out of the 102, which for which polling was done in phase one. Only 9 out of the 102 seats which went to polling this time around saw an increase in voter turnout in 24 as compared to 2019. And the states will come up where, you know, there's been a larger drop. These are UP, Uttarakhand, Bihar, Rajasthan, Maharashtra, and MP average drop of 5.2% as far as turnout is concerned. And non-Hindi heartland states have seen a lower dip, which is about 2.8 odd percent or so. What could be the potential reasons, right? The heat wave, it's hot out there across the country. It's been discussed quite a bit. Coincides with wedding season, festivals, but that always does happen. And voter fatigue, complacency, but that's a question mark. It's more of a question at this stage. IIFL equities, and this is actually, you know, a crucial part of this particular data point. IIFL says that the voter turnout, the lower voter turnout, will and should not make a difference to what the BJP can retain and actually even gain. And why do they say that? They've actually looked at all of the 40 seats which the BJP won out of the 102 which went to poll back in 2019, and they compared some numbers. And what they found is that for these 40 seats, the gain that they saw, BJP saw vis-a-vis the second party, the number 2 party, was very large. And this gap between BJP and the number 2 party is enough to offset any drop in voter turnout. So their assumption is, even if you assume that this entire drop in voter turnout goes against the BJP, the lead in these 40 seats for the BJP, in favor of the BJP, as opposed to the number 2 party, whichever it may be, is so large that it does not actually make a difference. So that is their contention. And I think from a market's perspective, people are talking about this, and this data point, the statistical analysis by IIFL perhaps should soothe nerves at the margin. These are the phases in which the election will be conducted. First 2 done, and of course, the others, of course, will follow as time goes by. The hope is, and we, of course, here at CNBC-TV18 certainly encourage everyone to go out and exercise your franchise, go out and vote, and of course, make these elections a success.
So we really have no real insight other than, I guess what is the catalyst that we are looking forward is more in terms of, say, post-government formation. I think that is a reasonable market consensus view that the current government is going to come in whatever shape and form. And so who will be the key ministries and what their key agenda is, I think it's a bigger driver than, what the exact seat count, etc. will be, is our limited sense. So not that we can do much about that either.
The low voter turnout. Well, be responsible, guys. Go out there, make it count, give that vote, and increase the voter turnout. And that's all we can say. With that, it's curtains down on this edition of Editors Roundtable. We'll be back bright and early on Monday morning. Stay tuned.